Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, May 31st, 2023. It's now the 30th. We start off in the S&P 500 daily chart and DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 2 count. And to negate that for end of day on the 31st, there must be a close below 4115.24 for the price slip to the buy setup count 1. The D wave, up wave 3 and down wave C has shifted over from the high of this bar. So the D wave, up wave 4 will print on a tick lower than this low on the 24th. And its 61.8 Fibonacci retracement level is at 4116.34. So printing it for tomorrow will be below where the Fibonacci retracement is 61.8. So what that means is once it prints, if it prints tomorrow on the 31st, is that it will be validated because it hit the 61.8 Fibonacci retracement at 4116.34, and that will put D wave up on D wave up 5 once the 4 prints. So I've zoomed in a little more so that we can take a closer look at the other levels. Price almost had a high that tagged this qualified and confirmed 50% exhaustion up at a high of 42.3110. The levels at 42.37.31, so that was close. Once it gets tagged, then there's more potential for upside movement. The odds are better once it gets tagged, that qualified and confirmed level. And not too far above that is the upper Stark band and channel 3 high, pretty much right together. And then there's a qualified supply projection still up here where supply could be brought to the market in the form of selling. And that one won't get negated until this ongoing supply line gets qualified and hopefully confirmed. And for the 31st, it starts the day out at 4208.79. So again, there needs to be an open above 4208.79 and then close above it for end of day on the 31st, and that will be qualified. And as long as it stays above there for another day, we'll get another supply projection here to replace this one. It will be definitely higher than this one. So if somehow it does not open above 4208.79 and then eventually closes above it, this will be disqualified, this ongoing supply line, and could be a fading opportunity again like over here. To the downside, there should be okay support at the Stark band middle band, which is a 9 simple moving average, and the Ichimoku conversion line, which is a 9 EMA. So they're right together there. Break below that, and then there's the Ichimoku baseline down here at that level. Break through that. There's new trend factor disqualified levels for now. So trend factor disqualified down 1 is at 4110.17. And there's a new ongoing demand line, which for the 31st starts the day out at 4106.02 approximately. So if there's a precipitous dropping, gets below that for end of day and closes under there, that will be qualified. And then the lower Stark band is right underneath that at that level. Channel 3 lows underneath the Stark band. And the propulsion disqualified momentum up for 50% is at that level now. And zoomed out, I turned Megaphone on, and you can see that the Megaphone down 6 up here, the end count printed. So the next goal for that to the downside to print the 7 for Megaphone would be to exceed under this low here on the 4th, and then we'll have Megaphone 7 print down here. And if that happens and the D wave up wave 4 gets printed and exceeds this low like for Megaphone, then the 2 will shift over where the 4 is at. And here is what was for a long time my downtrend line chart. I don't know if you can see the white lines here. I whitened them out because they were headed off into oblivion. There's still a couple valid blue ones here, 3,500, somewhere in that zone, maybe 3,400 now. But now we're using it for these patterns. I found 2 patterns. Here's a potential uptrend channel in dashed blue. Let's zoom into this area. So what I did to create the uptrend channel is created this top line. It only has 1 hit, hence the dashed line will turn it solid if and when there's another hit. And then I copied it and just dragged it down here somewhere so that I could find at least 2 candles that it fit on. So it fits on right here and right here, almost right here, but we'll just keep it as perfect at the bottom of these candle wicks. So the top of the potential uptrend channel in dashed blue here is at 4263.71 to start the day on the 31st. And the bottom dashed line in blue here is at 3839.50. I added these 2 levels to the big board along with this broadening top pattern. So I've zoomed in on the broadening top pattern in solid blue here. So I've been looking to draw this for the last couple of days, and since we had the hit here, I finished it up. So you can see there's 3 valid hits here, and 2, 1 here and 1 here, since it's anchored at the bottom of this hammer-like candle here. So the top line level for the 31st is 4239.56, and on the bottom it's 4022.10, right by this downtrend line right here, at least for tomorrow. And here's a look zoomed out again. And the ongoing drama with the NASDAQ 100 NDXHILO chart shows that since we last looked at this, there was a buy signal here on May 23rd. And now the 5 EMA in blue is hooking around to the downside. It's still really far away from the 10 EMA in red, but nonetheless has hooked around to the downside, and both the blue and the red are above the gold 21 EMA. And for all this skyrocketing in the big fat cap mega techs, chip stocks this time, there really hasn't been much movement in the KSTs. The long-term KST has actually continued its downward trajectory. The intermediate term KST is still below 0 and looks like it has a very slight rollover. You can barely see it in the thumbnail. The short-term KST is above 0 and did cross above its signal line, so the short-term move up probably not going to last long on the longer term. And the NASDAQ Composite HILO chart is definitely faring better than the NASDAQ 100. The NASDAQ 100 might not have as many chip stocks in it, so that's reflected over here, and the NASDAQ Composite would be my only guess. So it's flying high. Blue is just straight up. Red, 10 EMA, all three of them. It's a beautiful rainbow pattern here, blue, red, gold. And the KSTs are completely opposite of the NASDAQ 100. The long-term KST definitely has an upward trajectory. It wants to try to get back above its signal line, then it has to get back above zero. And the intermediate term KST has already crossed its signal line and is headed up very nicely. And the short-term KST has rolled over, crossed under its signal lines, but it is still above zero. So yeah, that's completely opposite of the NASDAQ 100. And you can see the separation of the two in the main window down there. The light pink is the NASDAQ 100, and this grayish one is the NASDAQ Composite. And normally they travel together, as I've been pointing out for a long time. You can see back here they're right together, and now there's that big divergence here. And the New York high-low chart is still looking mighty sad compared to the other two. You can see its blue is still below the red and the blue below the gold 21 here, and all are pointed down, so that's not too good. And the intermediate term and long-term KST looks similar to the NASDAQ 100, and the short-term KST looks more similar to the NASDAQ Composite up here, where it's rolling over, but it's still above its signal line. And its signal line is above zero at 2.94 also, so I don't see too much concern there. It needs to turn around the other way for sure. So let's keep an eye on these intermediate and long-term KSTs here. And the pink line in the main window over here is actually the stocks only AD line. I thought I'd put that on there and try that for a while, so that's what that is. The S&P 500 support and resistance levels big board chart shows the gray areas at the pivot point and the ongoing supply line. And price in the aftermarket hours for the S&P 500 is at 42.07. So no ruling out of whatever committee they're looking at the bill for raising the debt limit. It's got to come out of that committee, and then it goes to the floor in the House. So nothing out of them yet. And there's 3 hardline Republicans in there. I don't know how many hardline Democrats, but everybody's predicting it will come out of that committee and then hit the floor. So either way, everything above the pivot point is pretty much fair game in the 4,200 zone. And then pretty much everything under 4208, this ongoing supply line in the 4100 zone, is fair game, at least down to about the daily baseline, 4139. There's still a couple of levels at the bottom of 4100. The S&P 500 daily AD line is still below its 21 EMA signal line. The NASDAQ 100 daily AD line is still slightly above its 21 EMA signal line. And here's something I don't think I've ever seen before, that the ROC 1 ended up exactly at zero and pointed down. So I do not believe I've ever seen that hit zero and close for the day at zero. And the ATR2 is still within its low volatility zone, and the PPO extreme took a tick down. It's back in the 3% range, 3.99. So it needs to get above that PPO level 4 here, and then the PPO level 5 for the downside is here. And the New York traditional McClellan breadth oscillator to get back to zero would require 694 advancers over decliners to get back to zero. I'm just about the same as yesterday. Have a great day.